Tesla being the new Apple. And when the smartphone industry first started, Apple kind of had 100% market share because they were the first one to market with a true smartphone. It's the same thing for Tesla. As the market matures.
If you're investing in Tesla, so don't miss this video. And let's see what experts predict Tesla price in 2024. Let's dive in.
What's the conclusion that you draw on the pricing that Tesla released?
Well, I got a chance to drive the Beast, and that was the vehicle that they gave me to fool around with. It definitely, well, it's wicked fast. It's unbelievably comfortable. I would put it in with other $100,000 vehicles. Now, I don't know the other two products at all because I didn't really get a chance to test those. But the one that I had, the Cybertruck Beast, definitely is quick. That'll scare the daylights out of most people. And if you've got it, there's a video of the Cybertruck and a Porsche 911 taking off from the line and doing a quarter mile. And the Tesla wins, but it's towing another 911. It beat the 911 towing a 911. It's fast. It's extremely fast. It's very.
Hey, Sandy. Yeah. Sandy, I called you at the top of the show the teardown titan. I just want to explain to our audience, you're principally an automotive engineer, right? And you kind of rose to prominence because you take new vehicles, tear them apart right down to the individual nuts and bolts, and assess what they're made of, assess their efficiency. You have been in the factory, and I wanted to ask you, based on the design of this vehicle and what you saw down in Austin Giga, how many do you think they're going to be able to build initially this year or the remainder of this year, next year?
That's kind of a tough question because there's a lot that determines whether or not you're going to be able to push out those products. A lot of it has to do with the supply chain, and there's a lot of things that kind of push you in different directions as far as launch is concerned. What I saw was running at 60 jumps per hour, and that's kind of normal. The rest of the factories that I've seen, the rest of the Tesla factories are running at 42, 43 seconds per cycle or per station. That's fast. That's really fast. So if they could keep that momentum up, in 12 months, they should be able to do easily 250. It depends on how many, how many shifts you've got and whatnot, but they should easily be able to do 250,000 a year at that rate, 250 to 500,000, depending on how many shifts.
Yeah, and certainly Musk saying that 250,000 units possible by 2025. I'm interested, Stanley, in ultimately, how does this disrupt the pickup truck market at large? You keep on showing the sort of F-150, in particular, the EV competitor there, and how the price point is a lot cheaper there, even though Elon Musk himself said, look, it looked expensive at the time. How do you think it compares to the rest of the market?
Well, everybody's been trying to say that they're all pickup trucks, but really and truly, there's a distinct user difference between the Rivian, the Lightning, the Cybertruck, and say something like the Hummer. They're not really tuned to attack the same market. They all can do pickup truck kind of work, but I think that the average person who's got a construction company is probably going to be going for a Lightning. The guy who wants to go to the grocery store and every once in a while pick up a 2x4, that's probably the Rivian kind of story. The Hummer, I don't know who that is. But I can tell you, for me, I'm going to be brutally frank here. I'm trying to get a hold of two of them, and one is going to be my drive. Because for me, if you're an outdoorsman, you got quads, you got hunting on your mind, hunting or fishing or whatever. This is the truck for you. This is what I'm truly looking for. I have a Lightning at the office. My wife owns a Rivian. Like I say, I don't know an awful lot about GM. Has never offered me one of their Hummers for driving. But for me, what I want is I want a Cybertruck.
Okay, you want it, Sandy. What is any criticism then? What is it that might be a slight worry when you go and take that pickup?
Yeah, I drove it for a few hours, and the only time that I had a problem with the thing was when I had to try and where the heck am
We
I?
can still hear you. Don't worry. Leave it.
Yeah, you're
Okay,
good,
yeah.
Sandy. Keep going.
Yeah. So, anyways, the only thing that I had that was an issue.
Jenny Horn from ORN joins the hosts to start the conversation about Tesla's most recent financial results. Tesla released their Q4 2023 vehicle production and delivery figures, stating that 48,400 vehicles were delivered and 47,455,000 were produced. The annual statistics demonstrate a 38% YoY growth in delivery and a 35% YoY growth in production, both of which are regarded as objectively strong. With reports of deliveries of almost 526,000 electric vehicles in the fourth quarter, BYD, Tesla's Chinese rival, has put Tesla's market share in jeopardy. Additionally, there are conjectural claims that BYD will join the American market within the next 5 years. The hosts talk about how Tesla faces fierce competition around the world and how, despite the strong volume, the stock is currently down 1.5%. The topic of Tesla's future actions, specifically the Cybertruck, comes up, and the hosts advise against basing annual projections purely on fourth quarter delivery figures. The conversation then shifts to Nvidia, emphasizing the company's outstanding 2023 performance, which included a gain of nearly 220%. As of 2025, Stifel projects that Nvidia will have established a strong position for itself in markets with a total addressable market, TAM, over $100 billion, building on its momentum in AI from 2023. They view Nvidia's transition from general purpose to accelerated computing as a big chance to increase profits and revenue. Stifel's price estimate for the share is $665, which would indicate a 34% increase from the previous close. While acknowledging Nvidia's optimism, the hosts also point out that reaching lofty earnings expectations is difficult. The discussion concludes with a comment about Nvidia's stock declining in spite of optimistic outlooks, highlighting the reaction of the market to lofty price targets and the difficulty of living up to high expectations.
Jenny Horn is joining us, hosting Next Gen. We got the other half behind her with Alex Coffey joining me here shortly. Let's talk some Tesla numbers. We've also got some figures out from BYD. Jenny, walk us through it.
Yeah, and Oliver, it doesn't seem like this is enough to really excite in the overall market today, although Tesla did just report its fourth quarter vehicle production deliveries for, of course, 2023. So we are seeing fourth quarter deliveries coming in around 484,000, just slightly over, which, I mean, right now their fourth quarter production figures come in just shy of 495,000. Their total annual deliveries are around at 1.8 million, and their total annual production figure also just over 1.8 million. So what this means is we saw back in 2022, to go back even further than 23, that Elon Musk did report annual deliveries of 1.3 million and production at around 1.4 million. The new numbers represent delivery growth of around 38% year over year, as well as production growth of around 35% year over year. So that is something to be considered. I think that when you look at these figures, it's not necessarily as impressive as perhaps what the street maybe would have wanted, but when you compare them on a year-over-year basis to the last fiscal reported year, it's objectively strong. I mean, we have some of these figures that are up 40% year over year for a company with a scale as big as Tesla's. I think, frankly, that's impressive. Then we also, of course, do have BYD, which is one of its closest, if not the closest competitor in China now, giving it a run for its money for that very prized market share, reporting its
Jenny Horn from ORN joins the hosts to start the conversation about Tesla's most recent financial results. Tesla released their Q4 2023 vehicle production and delivery figures, stating that 48,400 vehicles were delivered and 47,455,000 were produced. The annual statistics demonstrate a 38% YoY growth in delivery and a 35% YoY growth in production, both of which are regarded as objectively strong. With reports of deliveries of almost 526,000 electric vehicles in the fourth quarter, BYD, Tesla's Chinese rival, has put Tesla's market share in jeopardy. Additionally, there are conjectural claims that BYD will join the American market within the next 5 years. The hosts talk about how Tesla faces fierce competition around the world and how, despite the strong volume, the stock is currently down 1.5%. The topic of Tesla's future actions, specifically the Cybertruck, comes up, and the hosts advise against basing annual projections purely on fourth quarter delivery figures. The conversation then shifts to Nvidia, emphasizing the company's outstanding 2023 performance, which included a gain of nearly 220%. As of 2025, Stifel projects that Nvidia will have established a strong position for itself in markets with a total addressable market, TAM, over $100 billion, building on its momentum in AI from 2023. They view Nvidia's transition from general purpose to accelerated computing as a big chance to increase profits and revenue. Stifel's price estimate for the share is $665, which would indicate a 34% increase from the previous close. While acknowledging Nvidia's optimism, the hosts also point out that reaching lofty earnings expectations is difficult. The discussion concludes with a comment about Nvidia's stock declining in spite of optimistic outlooks, highlighting the reaction of the market to lofty price targets and the difficulty of living up to high expectations.
All right, heading into 2024, Tesla faces several risks. Let's dive into those with longtime Tesla investor Ross Gerber. Gerber, Kawasaki Wealth and Investment Management CEO. Ross, always nice to get some time with you as well here. We were just talking with a prior guest on the risk to Tesla, their financials, their stock price, because of some of the views he has taken in terms on social issues. How concerned are you that next year his views start to hurt the demand and hurt the stock price of Tesla?
Well, first off, shout out to George. I read his Tesla and his work. He's a great analyst and a great person to follow if you're looking for Tesla data. And I think his point about earnings being the driver of stock prices is ultimately what's going to determine Tesla's success next year. So the fact that Elon has, become, and I don't think it's equally a similar controversy of smoking weed on Joe Rogan to making severely anti-Semitic remarks. These are different levels of, or telling everybody to F off, So I think if Musk's behavior continues to get more and more extreme, that is a risk to Tesla sales. But the bottom line, as George pointed out, it's the best vehicle on the road. It's the best value on the road. So consumers literally have to buy a lesser car because they don't like Elon. And so I don't know if consumers are going to do that or not. I know certain consumers are for sure, but there might be many others that just simply want the best car.
Yeah, balancing whether you want to continue to buy from a figure that perhaps goes increasingly divisive versus just saying, all right, I'm able to just kind of take the juice and ultimately just keep moving and be comfortable with my car purchase, at least at this point in time.
Well, Tesla is Tesla and Elon is Elon. And I think the best thing Tesla can do is continue to differentiate its brand, as Tesla. And
haven't they intertwined so much of that brand with Elon, though?
Well, it's hard. It's really hard because Elon is basically the face of the brand and the voice of the brand. And they've been, if you notice on Twitter, Tesla's been tweeting more as Tesla. They've been defending themselves more. We've seen more attempts at advertising. And I think if Tesla goes full in on advertising and continues, to sort of build its brand, Elon's effect will be less and less damaging to Tesla overall. But the bottom line is you can't diminish the effect of the damage that he's caused.
Ross, let's talk some numbers here because we were showing in a prior segment how the earnings estimates for next year for Tesla have continued to fall really throughout the year, but most notably, at least according to Yahoo Finance data, over the past 90 days. Can this stock continue to work higher next year if earnings estimates continue to come down and Tesla does have some product miscues?
Well, I don't know about product miscues. I mean, they're going to struggle to put Cybertrucks out next year, but that's expected. In my mind, it's a launch year and it's an incredible new technology and product. That said, I like that they've lowered expectations this much because it gives Tesla opportunity to beat. So if they can actually increase margins by lowering costs and or not have to lower prices because demand picks up, maybe we get lower interest rates and maybe Tesla beats earnings over the course of the year. And I think that's what a lot of the analysts who have price targets at 300 or 350 are thinking, that Tesla might earn closer to $5 than, let's say, the less than $4 that's expected. And if that's the case, a $300 price target does look reasonable for Tesla. But right now, $4 is, where I'm at. And, so Tesla's a fully valued stock, but, we're long-term investors. So, we're very bullish on Tesla's long-term. And it is an AI company. It's absurd to not, give it credit for where it is.
An AI company at the multiple of Nvidia, at the multiple of, what's the comparison?
Well, Nvidia is a hardware company, so they're in a particularly good spot right now because everybody needs what Nvidia makes, and there is no, AI without Nvidia at this moment. Where Tesla has the first application that's pure AI that actually helps society. So large language models are wonderful, and they're just at the beginning stages of its potential. But Tesla full self-driving has been going on for years, and it's pretty close to driving. So we've got a real world AI driving car. I don't know what else you want. I mean, it sees in real time what's happening on the road and makes adjustments and drives for you. So it's not perfect yet, but it's improved dramatically over the last year. And once again, I think it will get solved. It's just how much time. We're at a point where the technology has gotten so far that the incremental increases in ability are harder and harder, but yet, nobody wants any accidents in a Tesla, full self-driving. So that expectation is extremely hard to meet.
All right, Ross, next time we're just going to scrap the conversation. We're just going to have a jam session. I see all those Les Gibsons in the back. Great stuff here. Ross Gerber Kawasaki, Wealth and Investment Management CEO. Thanks so much, Ross.
Yeah, thanks for having me. Have a great New Year's.
Happy New Year to you too.
The CEO of Gerber Kawasaki Wealth and Investment Management, Ross Gerber, is interviewed by the host in this video regarding the threats that Tesla may face in 2024, the contentious actions of Elon Musk, and their possible effect on Tesla's stock price and sales are discussed. While acknowledging the concerns, Gerber argues that Tesla's better product and value are what eventually fuel the company's success. The need of Tesla setting itself apart from Elon Musk and the possibility of using advertising to lessen the negative consequences of Musk's actions are also covered in the discussion. Gerber discusses reduced profit forecasts in relation to Tesla's financial future, but he also views this as a chance for Tesla to outperform projections through cost-cutting and higher demand. The talk ends with a bullish long-term picture for Tesla, emphasizing its position as an AI startup with practical uses in fully autonomous vehicles. While both the host and Gerber acknowledge the difficulties, they are optimistic about Tesla's future.
And how big a deal is this potential crown they're about to take?
It's a great question. And like people say, history doesn't repeat, but it rhymes. And so we've talked a lot about Tesla being the new Apple. And when the smartphone industry first started, Apple kind of had 100% market share because they were the first one to market with a true smartphone. It's the same thing for Tesla. As the market matures and the EV pie grows, Asian competition came into the smartphone market. Same thing is happening into the EV market. And eventually, Tesla will likely be overtaken from a unit perspective. But what's most important, and we think Tesla will win over time, is the profit share battle. But look, today, Apple doesn't have the most unit market share in smartphones, but it overwhelms the market in terms of profit share. And we think ultimately that will be what's most important for Tesla, and we think that'll happen.
You have a buy rating on Tesla, $267 price target, but is Tesla making cars more profitably than BYD does, and do you expect that to continue?
What Tesla has to do, and so this year was the tale of Tesla cutting prices, impacting their gross margins. We think there was an intent to that, and that over time, they expect to sell a lot of full self-driving FSD software to people who already own their vehicles. That's a big key to the story because right now their profit margins have suffered, but we think that's with a long-term plan in place to sell FSD software the same way Apple sells services. And so ultimately we think it's through FSD software and through the vertical integration that Tesla's the best in the world at. It will ultimately result in higher than average gross margin and profits for their EVs relative to anyone in the marketplace.
If Tesla's infrastructure in manufacturing is leading edge, why have I read detailed profiles about how BYD's is better?
Look, BYD has some competitive advantages. They have a base that's purely in China. Tesla operates in the United States, in Europe, but Tesla's putting things together from a manufacturing perspective that are way beyond what other companies have done. I mean, they're building these molds in their vehicles for the Model Y, for example, this gigacasting that essentially breaks down a vehicle into only a few parts versus hundreds or even thousands before that. They're way ahead of the curve and ahead of their competition and learning how to manufacture efficiently at scale and innovating in places that other companies are just trying to catch up now.
But will they be hamstrung by the relatively limited number of models that they offer?
It's a great question. Look, ultimately, right now this year, they'll be in and around 1.8 million, about the same as BYD. We expect that to grow a lot in the future. We'll see what they say about 2024 on their earnings call. but we expect this company to be in the
The stock price of Tesla is discussed in the film, along with possible threats from BYD, a Chinese electric vehicle (EV) manufacturer. The news of a redesigned Model Y from its Shanghai factory and anticipated record deliveries has caused Tesla's shares to surge. But BYD is thought to be a strong rival that will soon overtake Tesla in terms of worldwide EV sales. George the Guest says that although Asian rivals like BYD may eventually overtake Tesla in unit sales as the EV industry develops, retained profit share is crucial to Tesla's success. He highlights that Tesla's emphasis on profitability, especially through the sale of full self-driving (FSD) software, will be critical, drawing comparisons to Apple in the smartphone sector. The host queries whether Tesla is producing automobiles with a higher profit margin than BYD. George clarifies that while Tesla's price reductions have affected gross margins, he thinks the company's long-term strategy is to offer FSD software in a manner akin to Apple's service sales, which will result in profitability and higher-than-average gross margins. George admits that BYD, which is based mostly in China, has certain advantages over competitors in the manufacturing sector. He does, however, draw attention to Tesla's cutting-edge production techniques, such as creating molds for the Model Y that reduce the vehicle's component count and improve manufacturing efficiency on a large scale. The host expresses doubts about Tesla's small model lineup and whether this is a disadvantage. In response, George says he expects Tesla's output to increase significantly, potentially reaching tens of millions of units over time. He makes reference to Tesla's intentions to reduce production costs by eliminating some components from their manufacturing process. The discussion concludes by pointing out that, despite potential unit sales challenges from rivals like BYD, Tesla's emphasis on profitability, creative manufacturing, and expansion strategies may be able to solidify its place in the EV industry.